In this video, we're going to talk about backtesting, which for a lot of people is an absolute waste of time. But I have to say to you that we absolutely, completely disagree with that. Backtesting for us is one of the most important things that you can do as a trader to build confidence in your system. And once you have confidence in your system, you'll be in a much better position to be able to take advantage of the opportunities that your system presents itself. But if you are going to backtest, you have to do it properly. So in this video here, we're just going to give you a few hints and tips about what you need to do to be successful backtesting and to get the most out of it. But before we get into that, I just want to give you a little story about how backtesting has helped me before. A good few years ago, when I was starting to trade a new system, so probably 3-4 years ago when we developed the range trading system, I went through a vigorous round of backtesting of the system. So I went back over years and years and years worth of data and built loads of statistics on the system. So I knew how it performed, I knew the maximum drawdown, all of that kind of good stuff. And then during one day through live trading, when I was actually trading the system with real money, I had a morning which was absolutely shocking. I'm telling you, I couldn't have had a worse morning trading if I tried. Now, it wasn't because I was making mistakes or anything like that. It was just that the system couldn't seem to pick a winner, and it just didn't give me any fresh air whatsoever. It didn't give me one moment's worth of profit. Every trade I took literally went against me, and it was so very frustrating. But anyway, the point is that I then, during the lunchtime, so before the afternoon session, so if you guys don't already know, we trade between 8 and 11 a.m. in the morning UK time and 1 p.m. to 4 p.m. UK time as well. So after the morning session, I was feeling very frustrated. I was ready to kind of throw in the towel and say, you know what, I'm not interested in this. I'm not interested in trading today. I'm just not in line with the markets and all of that kind of good stuff. But what I did during the lunchtime anyway is I went back over the results and I went to look at a couple of the losing streaks and when they occurred and things like that. And I found that, you know, a few months or probably 4 or 5 months before that day that I was trading, I actually had a day again where it was very much like that. I wasn't live trading that particular day. These were backtested results. But we had a morning like that where there were sort of 3 or 4 trades that just completely went against the system and never gave the system any ounce of profit. And then I looked into the afternoons trading and I saw that in the afternoon trading, you actually made back all of the money that was lost in the morning. So with that in mind, I thought, you know what, I better not throw in the towel. I'm not going to be stupid. I'm not going to revenge trade, but I'm going to stick to the system and just trade as best that I can. Okay. So when it came to the afternoon session, sure enough, I started to take profitable trades, and I took profitable trade after profitable trade. Now, I didn't quite make all of the money back that I lost in the morning, but I came pretty close to break even. And that for me is a lesson in one, respecting your system, so not being discouraged from drawdowns. Okay, now I'm not saying that you shouldn't, you know, throw in the towel and you shouldn't stop trading for the day if you're trading badly, as in you're making mistakes and you're taking stupid trades. But if you're trading well and you're just taking losses, then you don't need to, you know, stop trading for the day. If your system says to take the next trade and you can focus on executing good trades, then there's no reason not to continue trading. Okay, now you have to make the distinction between the two. So the point here is that I was able to use my backtesting the results and the statistics that I built up during backtesting to help me with my live trading, to have confidence in this system, to be able to move into the afternoon session and to go into the next battle. The next battle I was able to win, and as I said, it brought me pretty close to break even for the day. And I would never have done that if I didn't have the statistics I had built up during the backtesting. Okay? So with that in mind, understanding what I'm trying to tell you here, let's talk to you about how you need to go about backtesting. Now, first things first is to appreciate the fact that most people do not agree with backtesting. They say that you don't get the same emotional roller coaster that you get during live trading. Now, I agree to an extent, but I also disagree. And the reason for that is that humans want to be right. And that exists whether you have money on the table or not. Now, I agree that you won't have the extent of the emotions won't be the same. But I disagree with the fact that, you know, you don't care at all. So backtesting doesn't count for anything because, you know, if you're honest with yourself, even during your backtesting, you want your theory to be correct. And I know I know that from my own experience. When I'm backtesting, even though no money's on the table, I want the next trade to be right, and then the next trade to be right, because I want the theory that I've come up with for the system that I've come up with. I want it to be successful. I want to be right. So regardless of the fact of, whether there's money on the table or not, ultimately as human beings, we want to be right. And if we want to be right, well, then we're still inclined to make stupid decisions to kind of hide losses that don't exist and all of that kind of good stuff. So, you will experience this when you backtest for real, I promise you. So, but just take it from me that even, backtesting has a place, and you will also experience some of the psychological impacts of real trading during your backtesting. But what backtesting allows us to do is build confidence in our system and statistics in our system, which in turn will help us with live trading. Now, the statistics part, I already explained to you just now. You can understand or you get to know what the largest drawdown is. You get to know what your equity curve can potentially look like. You understand when the best time of the day to trade is, what the best pairs to trade are, what the best stop loss is, what the best take profit, all of that kind of good stuff. You're able to build the statistics in your trading which help you with your live trading. And also, if you backtest over a large enough sample size full of trades, so I'm not talking about 10 or 20 trades, I'm talking 50, 100 trades, 100 or even 200, 300 more, but minimum of 50, 100 trades. Okay, once you can backtest and you backtest properly and you're honest with yourself about the trades, you're then able to build confidence in the system, because you can see that when money isn't on the line and when you stick to your rules, this system makes money. So if you start to go into live trading and you make mistakes, then you know that it's actually you and it's not the system. You can have confidence in the system. More to the fact is, when you have a drawdown of maybe 3 or 4 or 5 trades, you can look at your backtesting, you can say, you know what, that's expected. That's happened before. I've had 4 or 5 bad trades during the backtesting, but oh, look, then after that, after those 4 or 5 bad trades, I then had 6, 7, 8, 9 winning trades on the bounce. Does that make sense to you guys? So it helps you build confidence in your system, because statistics allows you to look back to understand what the system's capable of, and then you can put that into the live trading context when you have real money on the table. So how do you go about backtesting? Well, first of all, you must make a plan and you must stick to it. And I've got here in capital letters, do not cheat. And the reason that I say that is that I know myself, I've been inclined to cheat myself. When I've been backtesting in the past, when I've gone through a system, I've been very, very close to saying, I wouldn't have got into that trade because of, make up an excuse for why you wouldn't have been in the trade. Therefore, I don't need to count that as a loss. That's not really backtesting your theory. That's not going to help you build true statistics in your system, and hence you won't be able to have true confidence in the system. So what you need to do when you're backtesting is you must write down all of your rules, write down where you get in, where you get out, what the chart should look like for you to get in, what the chart should look like for you to get out, all of that kind of good stuff. Really write down all of the rules for identifying, entering, and exiting a trade, and then backtest according to those rules. So you go forward 1 bar at a time. You don't look at the rest of the chart. You go forward on your screen 1 bar at a time, so you can't see the rest of the chart. And you say, okay, so what would I do here? What would I do here? Next bar, what would I do here? Next bar, what happens here? The market's looking like this. Should I take this trade? Etc, etc. Okay, so you put your plan into place and you trade according to your plan, but you go forward 1 bar at a time without seeing the next bar. You do not cheat. You trade according to your plan, and then you see what the results are after 50, 100 trades. And after 50, 100 trades, you decide whether the theory has any weight in it, whether the system makes sense. And if it makes sense, you know what? You go and test another 50 or 100 trades. Either on that pair or a different pair or whatever it is that you need to do, but you test more trades. And then you collect statistics on all of the trades. So you need to know what time was the trade executed, how long did it last, what pair was it in, what was the direction, what was the entry, what was the stop, what was the target, what was your exit, what was your market condition, and any number of other factors that you can think of that will help you when you're live trading to understand how your trade should go, what's normal for your trade. You collect all of that information, and then you can analyze it at the end of the day and decide whether or not it's a good system and whether or not it's going to make you money. Okay? Does that make sense to you guys? So you need to make a plan, stick to it, do not cheat, collect statistics on your trading, time of the trade, duration of the trade, the pair that you're going to trade, the direction, the entry, the stop, the target, your exit. Now, why do I have exit and I've got target and stop there as well? Okay, because sometimes you may have something like you've got a trailing stop, so your initial stop isn't the one that's got hit or something like that. So just other factors there that you may write into your trading plan. The market condition, what does it look like? Was it trending? Was it consolidating? Why did you get into that trade? And if you do this over enough trades, and when it gets into the live markets, you will know unequivocally what a good trade looks like, and you will not hesitate when it comes to taking the right trade. Okay? So I hope this has been a useful module. As I said, I know a lot of people disagree with backtesting, but I have to tell you that it is very, very important. It is something that can really genuinely help your trading. So please do not skip it. All right then, guys and girls, I thank you very much for watching this video. And if you have any questions, please post it below the video. Otherwise, I look forward to seeing you on the next module. Take care now and have a good day.